Kangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
G'day and welcome to the COB. I'm Andrew Gagan. Thanks for joining us on this Wednesday as we wrap up the day. Unfortunately, it is another day in the red. Let's take a look at where we're at. So the Australian share market, essentially following global markets lower, are raising the previous session's gains as the bond sell-off gathered pace. Now that's been fueled by Iran war inflation fears, which have sent yields, particularly on the US Treasury's longest dated bond, to their highest level in almost 2 decades. So the CBO looks as though we're going to finish about 1.1% lower, whereas a little more exaggerated on the S&P ASX 200, it's down around 1.2%. Mining and tech stocks are leading the decline there, while retail and energy did offer some support. Let's get to the themes of the day then. So, rally erased. Well, that was certainly the case. We were up significantly yesterday, and that's all disappeared in today's trade. Bonds bomb. They have sold off significantly. I was just mentioning there, obviously, where those yields are going to at the moment, and this is happening across the globe right now. And Nvidia nervousness. So, Nvidia, the world's largest company, will report tonight, our time. There is market nervousness there ahead of its result because it always comes out with a beat. May well do so again, but it's a question of just how much of a beat it is going to be and what that tells us, particularly about the AI trade that has unfolded on Wall Street, which has driven, particularly the Nasdaq and the S&P, to record after record this year. Let's just get across some of the sectors that have moved in today's trade. So I mentioned the miners having proved to be a drag there, particularly BHP, Rio, Fortescue, all down around 1.5% or so. Mineral resources bucking the trend there, up more than 3%. Elsewhere, the banks also in the reds, led lower by Westpac, which is down 2.3%. Also Macquarie in the red there as well. And also investors just mindful of that fallout. We continue to hear from the budget last week and how that's likely to affect the banks. Consumer stocks, they remain just a little mixed at this point. Woolies had a good run yesterday off the back of a broker upgrade. Coles followed suit there. They're still in the green today, whereas Metcash has come off. Endeavour Group and Harvey Norman lower slightly. Catching up with the main stories of the day, James Hardie posting a lower than expected drop in annual profit as unfavourable weather disrupted construction across key markets, while inflation and affordability pressures weighed on housing activity. Group net sales there up 25% to $4.84 billion. Catapult posting record FY26 revenue of $140.7 million US dollars. That's up 19% year on year, thanks to 2 acquisitions. But its after-tax loss widened to almost 24 million US for the full year, compared with 8.8 million a year prior. Flight Centre has made a $5 million US dollar strategic investment in Boston-based corporate travel company BlockSky. That gives Flight Centre's corporate arm FCM early access to BlockSky's blockchain-based payments platform. And still in that space, Webjet making a net profit of $3.7 million. That's up 85% from the previous year. However, the online travel agent saying Virgin Australia has cut commissions in a move that will cut its revenue. And Electro-Optic Systems slipping further after it raised $175 million on an issue price of $8 a share. Well, let's unpack what we're seeing on markets, particularly in today's trade. We are joined by Kai Chen from MPC Markets. Kai, welcome back to you. Another negative session, as I mentioned, wiping out what was a positive session yesterday. We're up, we're down. And that's been the tale, essentially, but mostly negative, you would say, certainly on the Australian market in recent times. Can we start, Kai, with what we're seeing in the bond market and just how that is affecting, I should say, investor sentiment at the moment?
Yeah, no, absolutely. I think, the big news over the last week is basically the upward trajectory of bond markets across the world. We've seen US Treasuries break new highs in the 30 years and the 10 years. And what everyone's really afraid of at the moment is the inflation story, right? Because, obviously coming off the war in Iran and higher oil prices, that's really caused a bit of concern, and the bond markets are finally reacting to it. So, this is kind of flowing into the equity market and risk assets as well. So, we're seeing commodities come off. Copper's done really well, but it's coming off, and precious metals as well under pressure. And, the global equity markets is not immune to that as well.
So, how are you seeing that play out, particularly locally, given the dominance of the resources sector here?
Absolutely. So, we saw BHP, a lot of the mining stocks come off. MinRes bucking the trend. So the lithium stock's still fairly strong. But, it's got a bit of a double whammy on the ASX at the moment because obviously with the budget coming out last week, it's been quite substantial changes with the CGT proposal and negative gearing. So the market confidence is really low, and I think, there's some long-term implications in terms of the CGT tax changes that the government is proposing. So it's definitely dampened confidence, and we're seeing that in the banks as well. So a little bit weaker in the banks this week. So not good for the ASX.
In fact, we saw Commonwealth Bank take a tumble recently off the back of its result. Is it right to be broadly negative, at least in the mid to short term for the banks, do you think?
I think so, and obviously going off CBA being the most expensive bank in the world, and over the last, it had a spectacular rally, and we're all scratching our heads going, is it really fair valuation? But now coming into the pressure where I think with the changes in the budget, it's going to be fairly heavy on the residential property market in Australia. That's going to flow onto the banks and mortgages. So, it's not a great space for the banks at the moment. But, we'll still see if there's any amendments that come out from the budgets or not, or whether they're going to push the entire thing through. But confidence is very low in the banks at the moment.
Kai, let's get a little more stock specific. James Hardie, what do you make of that result? So, not as bad as expected, I guess, was the way the market looked at this. But what do you see as ahead, particularly given its focus on the US market?
Yeah, absolutely. I think the key point is the integration of ASIC, which has been actually going okay. So the acquisition of ASIC in the US market has done fairly well, and as you said, compared to guidance, they've actually delivered on guidance slightly better than where it is, and the revs increased by 25%. So it hasn't been a terrible reporting. It's a little bit better than expected, but it's I think with the backdrop, everything that's in the market at the moment, it's not immune to a price fall.
Did you have a look at Webjet and its result, and obviously also that news as far as Virgin Australia is concerned?
No, I didn't actually look at the specifics of Webjet, but I can, in general, the travel industry, I think with oil prices sticking at above $100, it's still coming under pressure, right? It's going to influence the margin for a lot of these airlines, and also, flowing onto travel stocks. So I think for Webjet, it's not going to be great at the moment with consumer sentiment and confidence. It's very low across the world. I think people are still obviously travelling a bit, but I think it will definitely dampen confidence.
Kai, let's turn our attention to tonight, the big result, the biggest of them all in terms of Nvidia. What do you think we should expect?
Yeah, I'm still expecting a positive report in terms of their earnings. They've delivered over the last 2 years spectacular returns and above expectations. I think it's going to continue. In terms of will there be a correction, we're seeing a pullback this week in terms of some of the tech stocks. Most of them have been in semiconductors that have in the last month really had a spectacular rally. So, looking at Micron, SanDisk, all these things, it's just mind-boggling how much they've gone up. Nvidia's caught some of the tailwind of that. Obviously, they're the largest in terms of the GPU manufacturers. If they report well, I think it will hold the prices up. But again, we got to consider the backdrop of the main story that's happening at the moment, which is risk off on higher bond yields.
And it's all relative too, isn't it, Kai? Because it always beats, but I guess investors look at, well, just how well did it beat compared to the previous result?
Yeah, absolutely. And in the recent earnings, they've been doing much better than expectations. So, yeah, I think that will likely be the case tonight. But yeah, I think that's a lot of it is priced in as well, though. Like given where the valuation of Nvidia is, so we talk a little bit about how much of the value is speculative and how much is actually derived from fundamentals. Like if you look at Micron or SanDisk, a lot of it is derived off momentum. It's future potential growth. So a lot of it is speculative. But yeah, so if we see a correction, these stocks won't be immune.
How would you approach, particularly investment in those hyperscalers? Would you be happy to hold here? Do you see it has more to run?
Yeah, I mean, it's a great opportunity because, basically with the momentum that there are in these stocks at the moment, you got to capture that. But I'll be very dynamic with my positioning in the sense like using trailing stops or even taking profits on portions of your position when it goes on a bit of a run. But yeah, being pretty active managing my positions.
Kai, great to get across what you're seeing in markets. Thanks for joining us on MPC Markets.
Pleasure.
Let's now turn to our stock of the day. It was James Hardie, as we mentioned, and Nadine caught up with Jonathan Tagadina from MPC Markets and Michael Gable from Fairmont Equities for their view.
Even though these results are great results, considering the tough conditions, and it's been run really well, they're just in a tough spot at the moment. So for me, I don't see that changing anytime soon. I think this rising inflation, rising yield, bond yield, and higher rates environment continues, and so I think James Hardie continues at the bottom end of the range. So I want to see some sort of reversal in the bond movements before I want to go into that sector. So for me, just a hold at this stage.
Even though we're seeing what's happening in the bond market and we could sit here and say, okay, well, it looks like they might go up. I think if they actually do go up, that'll be a bit of a shock to the system. Input costs are going up. The result itself wasn't too bad. I think sales were a bit under expectations, earnings were a little bit above. I don't think anyone had great expectations anyway for James Hardie. But I don't think we've reached that sort of bottoming out phase yet. So it could get cheaper. So I'd even lean just towards a sell and just look for other opportunities.
10 stocks picked by you, 2 experts, 1 hour.
Let's get to the companies that have been nominated by you.
It's like a witch hunt over there. Everyone hates data centers.
Just remember that most of their earnings are offshore, so there's no franking credits.
The call is brought to you by Centuria, an ASX-listed property fund manager with $21 billion in assets under management. Want to diversify beyond equities? Explore the Centuria Sydney CBD Prime Office Fund at centuria.com.au.
Well, let's take a look at the best and worst in today's trade then. Beginning with the leaders, Tech One making a comeback. It did suffer a little yesterday off the back of its results, but it's up 7%. Alcoa, aluminium facing there. Obviously, we're seeing supply constraints globally there, and also some of those lithium stocks doing well. Dalrymple Bay also out with results today, which was well received. Whereas those that have fallen, Tuas has resumed its fall. So it was off 60% on Monday, recovered somewhat yesterday, and it's back in the red to the tune of some 13%. Forty Medical also losing 10%, Predictive Discovery a similar amount. Guzman and Gomez losing out there, and Web Travel off the back of its update today. In the small cap space, Interis Technology up 12%, OneView Island Pharma also doing well, whereas those that have come off include GBM Resources, in fact a number of resource stocks on that list, including Monica and Beacon Minerals. Let's turn to what is happening overnight. We do get the FOMC minutes out of Washington, CPI out of the Eurozone, also earnings, Lowe's, Intuit, Target Hasbro. The big one's missing there. It is, of course, Nvidia that we're going to be hearing from overnight. And tomorrow, locally, we get employment data over in New Zealand, the trade balance among the earnings results tomorrow, Goodman, and an AGM, Telix among them, and Ventia. Okay, so let's recap where we're finishing today, around 1.1% lower on the CBO 200, very much dragged lower by resources, tech, and the banks. That is the COB. Thanks for watching and listening.